Hello movers and savers, welcome to another video by UBBP. Today, we are going to talk about credit cards. Some people love them, some people hate them. Some people get into a whole lot of trouble with them. Understanding why credit is important and how to use it properly can help you make smarter financial decisions. Let's break it down into simple terms, starting with why it's important to have credit in the first place. Borrowing money for big purchases. Sometimes we need to buy big things, like a car or a house, and we don't always have enough money saved up to pay for them all at once. Credit allows you to borrow money to make these big purchases and then pay it back over time. This way, you don't have to wait until you've saved up the full amount. Building a credit history. Having good credit helps build a credit history. This is like a report card for how well you manage borrowing money. A good credit history shows that you're responsible with your finances. This can be important for future financial needs, like getting a loan or even renting an apartment. Landlords and lenders often check your credit history to see if you're likely to pay them back on time. Getting better loan terms. If you have a good credit history, you're more likely to get better terms on loans, like lower interest rates. This means you'll pay less money in extra fees over time. Think of it like getting a discount because you've been a good customer. Emergency situations. Credit can be a lifesaver in emergencies. If you suddenly need to pay for something unexpected, like a medical bill or car repair, having access to credit can help you manage those costs when you don't have enough cash on hand. Convenience and security. Using a credit card can be more convenient and secure than carrying cash. Credit cards often offer additional protections, like fraud protection and the ability to dispute charges if something goes wrong with a purchase. Rewards and benefits. Many credit cards offer rewards like cashback, points for travel, or discounts on purchases. By using credit responsibly, you can earn these rewards while making your regular purchases. Building good financial habits. Using credit wisely can help you develop good financial habits, like budgeting and managing your expenses. Paying off your credit card balance on time helps build discipline and can improve your overall financial health. Renting a car or booking a hotel. Many car rental companies and hotels require a credit card to make reservations. Having credit makes it easier to book these services and can be a handy tool for travel and other needs. Establishing financial independence. Having credit and managing it responsibly is a step towards financial independence. It helps you learn how to handle money, make financial decisions, and plan for your future. Creating opportunities. Good credit can open doors to new opportunities. Whether it's applying for a mortgage, starting a business, or making a major purchase, having good credit can make these opportunities more accessible and affordable. In summary, having credit and managing it wisely is important for making big purchases, building a good financial reputation, handling emergencies, and taking advantage of rewards and benefits. It's all about using it responsibly to support your financial goals and needs. Now that we understand why it's important to have credit, you might be asking, how do I go about getting the right card? They might seem a bit tricky, but don't worry. We're going to make everything super simple. This may sound stupid, but we're going to start with the basics. What exactly is a credit card? Imagine you're at a store and see a toy you really want, but you don't have any cash on you. A credit card is like a magic card that lets you buy things now, and you promise to pay for them later. It's like borrowing money from a bank to get what you want today, and then paying the bank back later. Now let's talk about APR. APR stands for annual percentage rate. It sounds fancy, but it's actually just a way of showing how much extra money you'll pay if you don't pay back what you borrowed right away. Think of it like a fee for borrowing money. For example, let's say you charge $500 to your credit card with a 20% APR and do not make any payments for a year. You'll end up owing $600 by the end of the year. The $100 interest is the cost of carrying the balance for that year, making the APR effectively 20% in this case. The higher the APR, the more extra money you'll owe. So, it's best to pay back your borrowed money quickly to avoid these extra fees. Next, let's chat about credit scores. A credit score is like a report card, but instead of grades for your school subjects, it's a score that tells how well you manage borrowing money. If you borrow money and pay it back on time, your credit score gets better. If you don't pay it back or borrow too much and can't pay it back, your score gets lower. A high credit score means you're really good at managing money. and it makes it easier to borrow money in the future. A low credit score means it might be harder to borrow money, or you might have to pay more to borrow it. There are also different types of credit cards. Let's look at a few. Standard credit cards. These are the most common and let you borrow money up to a certain limit. You use the card and then you pay it back. Rewards credit cards. These cards give you special rewards for using them. For example, you might get points or cash back every time you buy something. It's like getting a little extra treat for using your card. Secured credit cards. These are for people who are just starting to use credit or have had problems with credit before. You have to put down some money as a security deposit, which the bank holds as a backup in case you can't pay back what you borrowed. Student credit cards. These are designed for young people who are just starting to learn about managing money. They often have lower credit limits and incentives to help build a credit history. So, how do you pick the right credit card? Here are a few tips. Think about what you need. If you want to earn rewards, look for a rewards credit card. If you're just starting out, a secured or student credit card might be a good choice. Check the APR. It's very important that you know how much extra you might have to pay if you don't pay back the money right away. This will directly affect your bottom line. Needless to say, the lower the APR, the better. Look at fees. Some credit cards have annual fees or other charges. Make sure you know what fees come with the card and if they're worth it for you. Read the fine print. Always check the details of the credit card offer. It's important to understand all the terms before you get a card. Finally, let's talk about the downsides of credit cards. While they can be really useful, they also have some risks. If you're not careful, you might end up spending more money than you have. It's easy to buy lots of things with a credit card, but remember, you have to pay all that money back later. If you borrow too much and don't pay it back on time, you can end up with a lot of debt. Debt is when you owe a lot of money and it's hard to pay it back. It can also hurt your credit score, making it even harder to borrow money in the future. So, to use credit cards wisely. 1. Borrow only what you need. Don't use your card for things you don't really need. 2. Pay it back on time. Try to pay back what you borrowed as soon as you can to avoid extra fees. 3. Keep track of your spending. Always know how much you've borrowed and how much you owe. 4. Ask for help if needed. If you're unsure about something, ask for help, but make sure you get information from a trusted source. Most banks have financial advisors on staff to help their customers. Don't be afraid to use this resource. You are already paying for it by keeping your money in that institution. Only ask for advice from friends and family if you trust them explicitly, and they are in the place you want to be financially. Family and friends always mean well, but they cannot teach what they do not know. And that's about it. Now you know what credit cards are, what APR means, how credit scores work, the different types of credit cards, how to pick the right one, and the potential downsides. I hope this helps you understand credit cards a little better. If you enjoyed this video, don't forget to like and subscribe for more fun and easy-to-understand videos. Thanks for watching, and see you next time.